What's up, guys? Welcome to the backtesting live stream. Just give me 1 second. I'm just gonna tweet that we're live. Let's see. So we'll begin in just a second. I'm just gonna tweet it real quick. And it looks like YouTube's good. X is good. Or no. So I just remembered we can live stream on X. We'll do that next time. Alright. I'm just gonna give it a couple more minutes just in case any people are a little busy. But who's all here? Where are you guys from? Good morning, Yiki. I know in the chat I saw some people saying they're from Europe, which is why we're doing 2 p.m. Oh, we got CH Trades. What's up, bro? Seen you on Twitter. You know what? Let's get started, guys. And feel free to ask any questions. We're basically just gonna backtest like normal and kind of walk you through the thought process. So if you guys like this style of trading, you guys can use whatever you learn. Let me see. And then we'll just leave this at 10,000. We'll just pretend it's a 10K count. Let's see. We can just do a month. I remember February, if you guys remember, Trump tweets were crazy. February, March, April. But you know what? I know what I'm gonna do. Choose a random month out of the year. October. Perfect. So we're just gonna do October. Start a true day open. Perfect. I'll be surprised if we get through a month. If it's gonna take a minute, but if you guys are around, I'm gonna try to do the whole thing right now. Hey, Trader Rackbar just logged in. What's up, bro? Yeah, been a while, bro. How you doing? What are you trading these days? Or model, I mean. mess this up. My bad, guys, my bad. Silver's been going back to green. Wow, silver, huh? Bro, you're brave for trading silver. I tried 1 micro on that thing and it was, nah. Just 1 micro was too high leverage for me still. You see, got cooked. Yeah, I felt I was gonna get cooked too, so I didn't trade it. But let me just check something real quick, guys. Excuse me. Perfect, YouTube's good. Yeah, I see Brian's crazy, bro. He's a monster. Okay, I just want to make sure we have the right date. So this is Asia Open, London Open, New York. We got New York time. Yup. All right, we're just gonna fast forward to New York Open, guys. Feel free to chime in too, guys. If you guys see something you want to trade, tell me why, and then we'll probably take it. But I'm basically just gonna backtest as if it was a normal session when I'm alone. And I'm gonna try to narrate the whole thing and see if you guys are into it. So, real quick, something just to clarify: red will be Asia highs and lows. And then blue will be London highs and lows. Just to make it, that way we're not typing all the letters all the time. October 1st, we're good to go. So, I'll be real with you guys. I use a lot of market structure, and I know market structure seems a little bit simple because you're just looking at the overall pattern, but for me it gives me a little bit of a gauge of the narrative overnight, right? Just to kind of have a little bit of context for New York, but this narrative doesn't mean it's going to continue the narrative for New York. It's just context, right? Asia, very bearish. London, almost a V-shaped recovery. And if it is a V-shaped recovery, more times than not, Asia highs get taken if it's a real V-shaped recovery. So that's just info to know, but there's no bias yet. We never have, like I know a lot of guys make a why not NQ, by the way? Why not NQ? What do you mean? We're trading NQ. Oh, because I'm using FX replay, I don't have the feature where you put the futures, but I already checked the charts that are basically identical to the NQ futures, and the system works the same way, so it's perfect. That's a good question though. Anyways, guys, so the way I approach the market, and I will say I would say like 70% of this model, you guys probably know Lonto. He taught me a lot of this stuff. So we used a lot of his work and then we adjusted it a bit just to fit a higher hit rate, less RR style. So you'll see Lonto catches monster moves. We won't catch those because I try to focus a little bit more on hit rate, and I usually go for at least 2R. 2R is like a sweet spot for me. Just good for my psychology. But anyway, market open. No bias. We're not going long, we're not going short. We wait on price to tell us who's in control, buyers, sellers. And this is why we have overnight levels, because I've learned that the overnight levels are actually very significant. When price tags London high or London low, let's see what happens. There you go. So first one is swept, right? And a lot of guys look for a sweep and reversal or a sweep and expansion, but we can't have a bias on either. At least I don't have a bias on either until we see confirmation. So what does confirmation look like? First things first, little gap is insignificant, okay? But I use it just for information. We swept it with a bullish gap, which means buyers, at least on a small time frame, they outpace sellers. For now, it's respecting the gap, right? No bias, no bias, no trade, no trade. Because we don't know if we're gonna get a nice trend up to Asia highs or if we're gonna get an aggressive reversal. Also, it's 9:45. I usually don't trade the first 15 minutes because buyers and sellers, you guys have probably seen this, the volatility gets crazy. So just like I mentioned, I love using market structure. If someone showed you this pattern and said, who's in control, buyers or sellers? What'd you think? I would say, I don't know. This is too crazy. We have to have very clear direction. Otherwise, it's not worth putting risk on because the odds are already against us, right? This is just New York low. We'll take a trade, We just gotta be patient. Okay, so I have an idea for both sides. Aggressive sell sequence, but we're not bearish. Why? Because we swept New York low, but we didn't expand past it. Okay? If we come back down and create a new low and respect some bearish PD array, at this point I have a bearish bias and we're gonna short to the overnight lows. And then the opposite's true. If we go ahead and re-break this high, then buyers are definitely in control. Why? Because sellers came in heavy and buyers completely disrespected all that move. So if we close above this and we respect bullish fair value gaps, I'll be bullish. So this is our bullish case up here. An expansion would be our bearish case. Will this gap get respected or disrespected? So we've got an inversion. Okay, an inversion doesn't mean full disrespect, in my opinion. See how we got an inversion? If we reclose again in the bullish direction. Okay. We created a higher low, irrespective of this price imbalance, and a higher high. So now we're starting to get, this is good. Now we're starting to get cleaner market structure. This is what I'm talking about. Now, compared to before, this is what we had, right? We can't tell who's in control. But if now someone showed you this, I wouldn't say buyers are fully in control, but does it look like sellers are in control or buyers? It looks a little more like buyers. We're getting higher highs, higher lows, right? So let's just wait to see if this structure will be valid. It'll be valid if we break this high. And notice that there's another fair value gap right here, and it just got respected like this one. Looks like we inversed it, and we're continuing. Perfect, broke it. So at this point, I would slowly start thinking, probably gonna buy instead of sell. Why? Swept New York lows after liquidity grab. If we're actually bearish, guys, we're gonna have a liquidity grab and we'll flush through New York lows. But even after grabbing all these orders, price didn't flush past the low. It came, nice V-shaped reversal, and we're respecting a bullish structure. So if sellers aren't that powerful to the point where they can't outpace buyers and we're starting to get bullish structure, I have no interest in selling. No interest. And you see this beautiful sequence now? This is directional. Perfect. I feel like we're gonna miss a trade because we have so many gaps here. Oh, and I'm gonna show you how we find our targets right now for take profit. Let me see. Stats say 2-to-1, or you use IOFED entry. Bro, what? I don't know what IOFED entries are. What is that? Oh, long inside a BISI, and oh, you know what, bro? To be honest, I know that I see T stuff, but I don't use BISIs or SIBIs or order flow. Here, let me just show you what I do and see, and then like after like 2-3 sessions here, because we're gonna go through October, we'll add something you mentioned, see if we can find a good confluence. Okay, we just swept Asia highs. So again, even though we have bullish structure, why won't I take a long here? Because price is known to have aggressive reversals after liquidity grabs like that, like significant levels like Asia highs and low prices. So if we get another expansion to the upside, just like how we did with London highs, now I'm definitely long, because you can place your bet that it's higher probability that we're going to continue a long trend on the day. I don't believe in like, oh, we can't buy here because it's premium. You know, how many times have you seen supposedly premium price, you don't want to buy, and then we get a 200-point expansion? Or the opposite's true when you think we're an extreme discount, and then further incredible expansion. So I'm okay buying near tops to these trends if it's supported by the buyers, if it's clear that buyers are in control. So I was bullish, but I'm gonna wait until we see expansion after Asia. That's decent, that's decent. Chopping, okay, good. See this structure here? A little bit of higher high. Printing similar here. So that's a good sign for us. Okay. I am officially going to look for a long trade. And the entry model is pretty simple. Entry model is going to be one of two things. We're either going to inverse the gap and look for reclosure in the bullish direction because we have our bullish bias. We're going to tap the gap, close in the bullish direction, and that's an entry model. If we inverse the gap and see displacement to the downside, we're just going to be hands off and we won't be short until we're back into this range, because we need real good confirmation that we're going short. So let's see. Yup, very similar to Lantos. The only real big difference is extra patience with outside of the overnight range. Sometimes I'll see he'll take an in-range trade. I prefer not to. And then the targets are more conservative, but the entry model, for sure you recognize it. Okay, we got an inversion. We're either going to be hands off until we get a short bias, or we're going to reclose above the imbalance and look for a long trade. That's actually confirmation. So I would prefer a more powerful candle, but just for educational purposes, we're gonna go long here. This is the last significant low. So technically this was the last. This is a little gap. Okay. I'll say that's a fair stop. Yep. And then how do we find our targets? This is actually the easiest part. You're just marking, for example, we have an hourly fair value gap. This is the gap fill. internal wick high, hourly high, hourly gap fill. Whoops, that's internal, never mind. In theory, these prices are magnets for price, or they're really good rejection levels too. And the way I go about it, guys, is once I have my stop loss set, once we have hourly targets, I'm focusing on RR just around 2. Even if we have a really nice drawn liquidity up here, you'll notice I close my trade pretty early just to compound. So for example, this is a 2R trade. And with my back testing, over time, 2R is really good because you get a nice average RR across the board. The average is like 1.7 or something. And if this take profit is between 2 significant levels, the take profit is higher probability because you're thinking this is the magnet right here. You're thinking this price is the magnet, so this should get tagged. If you can afford it and you have the room and the time and the patience and you're like, oh, I'm gonna risk losing the 2R to gain 2.4, by all means, you can do whatever you want. We're gonna take a trade, place order, and this is what we're gonna do. We're gonna keep it, so we're using 10,000. Oh, my bad, I said 10, we left it at 100. That's okay. We're gonna still keep the risk across the board consistent at 400 no matter what. We're never gonna change the 1R until the buffer's at a point where we can safely increase it. So this stays the same every single trade. No sizing up, nothing, because that's sizing up is an account killer. You don't know which loss is coming, which one's gonna be the loss. So if it happens to be on the one you sized up when you're not ready, that's where people get thrown off psychologically. That's where I used to get thrown off psychologically. I would say we get to this level, we're going break even. At this point, we're way too close to TP. All right, let's see what happens, boys. And I want to focus more on execution, guys. We're gonna take losses, we're gonna take wins. I don't want the backtest to be focused on, oh, P&L, oh, how are we performing? No, it's like great performance on execution. We're gonna trade as minimal as we can, looking for only A+, and always sticking to the risk management rule. As long as we stick to that, we have an edge. This should be a profitable session, assuming October wasn't a really bad month for the model. So oh, we're almost break even for sure. Okay, break even. So first trade's already fired. We're going to save the trade. We're either now walking away with nothing or we're gonna hit a 2R. We're not gonna cut the trade, not early, because over time, the average 2R ends up working well. I'd rather get trailed out than cut it early. Okay, so again, market structure. I love looking at price and just reading the tape. You notice how we're making higher highs, but they're super weak. Super weak. It's not like this sequence down here. It's not like this sequence down here. This is it's almost sideways. For me, I'll get more aggressive with trailing when I see this. Right now, we're just gonna let it play. Exactly, right? We see a nice little dump. But we just inversed a price imbalance. So this is a price imbalance. If we inverse it with conviction, which we just did, buyers are really in control. And I have high conviction on this target. Why? Because this is actually the drawn liquidity right here. So this should get tagged in theory. Watch, it doesn't get tagged. Oh man, gotta tick away. Perfect. Let me know if you guys one tick spec. Yeah, I hate the one tick thing, bro. Let me know if that's clear. We're gonna keep doing we're gonna execute just one model every single session this month right here. But let me know if any of this is unclear, or we can just move on to the next one. Sorry, what is the 24,715 level? I got you, bro. That is this internal hourly high. See that? That's the last time that there was any seller. All the orders here, bro, they were getting rinsed. When you see this, all buyers they have so much pressure, tons of orders at this level, hourly level. So in theory, you get a bullish trend, this should be a magnet for price. And she blew through that magnet. She's going for this next one. Actually, I know we already took the trade, but let's just see if this next draw would be taken or not. Why put your stop loss there? You can go through that, please. Yes. So let's zoom into it. Stop loss is based on two things for me. Okay, it's one or the other. It's either, see like how this was the last low and it was never tagged and we got a confirmation for entry. I put it just outside of it, just outside, because if we really zoom in, there's a little price imbalance. We could have put it at the actual low and it would have been fine. But I like to give it breathing room a little bit usually, and especially if we have a gap like this, because if we're gonna inverse this gap, look how close we are. We're gonna stop out, no matter what. Well, not no matter what, but it's a very high probability, and we're just placing our bets on probabilities. So I would be okay with the stop loss. This wick's a little too far for me. You know, then that ruins our RR. But let me see if this is gonna tag our next level or not. Oh yeah, real fast, perfect. So what did we get right? We got the trend after being patient, looking for the expansion past overnight levels. We got expansion, got confirmation. All we needed was an entry model. Got in, little drawdown, price wasn't as friendly as this sequence, but you can see that we bought it 676, we sold it 735. So that's that. All right, next trading session. Let me see if anybody's asking anything on. No, we're good. Let's go to the next trade. Asia, London, New York. Trailing stop. Here, I'll tell you right now. Let's see if this trade requires trailing stop. If not, for sure there's one that will. But it's based off market structure. Just to kind of answer it, you get a really good, like let's say we're long, you get a nice higher low and a really good higher high, probably placing stop at that higher low. But the higher high has to be strong. Okay, so this is London high, London low. And Asia will be red, Asia lows. Okay. So again, no daily bias. We're not long, we're not short. Because we have to wait till price tells us where it wants to go and why it wants to go there. Open. Okay, so the first level swept, London low. If we see good expansion past it, okay, we're gonna think about maybe a bearish day. I won't trade this inversion. It's the first one. Those, I never trade the first one. They're the most dangerous ones. They're usually the fake outs. But I reference it just for information. If we do inverse it and then respect it and continue, now I'm gonna look for an entry model in the range to go for London high. But we have to wait to see if it gets respected. No, you see what I'm saying? No respect, but it did create a beautiful bearish sequence. So sellers are in control. But I won't go short here yet, because again, just like the previous day, we're in between overnight levels. We're in between. So Asia can easily have a reversal. And if we're in a short here, we're gonna get stopped out. So we need expansion past Asia, respective bearish gaps through that, and then we will look for bearish or a short. Let's see what happens here. So we're not going to Asia yet. Perfect, we got an inversion. This is the type of price action you don't want to touch. No direction, it's choppy. So this is what I would say. If we have a nice 5, yep. So this is your 5 minute, right? If price is willing to do a liquidity grab and we inverse a significant gap, a big price imbalance where sellers were really in control, if buyers outpace sellers in a directional manner after the liquidity grab, only up here will I be bullish. That, or we're gonna end up looking for shorts. Or we could be bullish if we get this type of sequence down after a liquidity grab here with Asia. Okay. Bearish structure, bearish structure. She's gonna grab lows. Yep. All right. Are we bullish? No. Are we bearish? No. Because price has just swept 2 significant levels. After the sweep, it'll tell us the theme of the day. But it's not giving enough info now. We need expansion of the downside or respective bullish fair value gaps to the upside. Let's see what happens. Perfect. This is a really nice inversion. This is like a perfect sweep reversal pattern, but we're not going to trade the first one as mentioned. This is the first one after Asia. Don't touch that. Okay, notice. Yeah, perfect. Just a little. Yeah, this is hands off. This is hands off PA. Notice something real quick. This is not going to be, I know usually people use this for SMT. This is not SMT. This is just a reference for a higher high at the moment. She created displacement after coming to touch Asia again. So what is price telling you? Price is telling you, I'm not flushing through Asia. If you flush through it, respect the bearish PD array, you can be short. This higher high is telling me, we had our first bullish setup. If your stop loss was down here, you would have not got tagged. So we're technically forming bullish price action, assuming we don't make a new low. We make a new low, we're not bullish. If we respect this gap and expand away from it, I would say we can target London high because we already took out overnight levels. That's exactly what you want to see, actually. This is what I'll do. I like to use double confluence for entries. So this is what I'm going to say here. If we inverse this 1 minute gap after seeing a higher low put in, a disrespect of a bearish gap, a respect of these bullish PD arrays, and a second respect or a third respect of a price imbalance, I think it's a high chance we break this structure and we would be targeting London highs. So if we inverse this, I'm long. If we don't inverse it and we end up over here, I'm not short yet until we flush through overnight. There you go. That's our entry model. It's a little risky because we haven't broke structure here, but look at higher high, higher high, displacement, fair value gap inversion. We have a three-way confluence here. So stop loss will be at the last wick low. I'm gonna give it a little bit breathing room. Yep. And we're going for London highs. Now here's the thing. I mentioned that I'm more conservative, right? It's nice to see that this is a 3R, a 3.5. So if this is our drawn liquidity, if we're right on the trend based off bullish price action down here after liquidity grabs, then we can be very confident in a 2-to-1. Something like this. That's just me. Other guys, they go for the monster moves. I like to end my day early, secure the bag, lock it in, move on. But just for education purposes on drawn liquidity, we're gonna leave that there. So we're gonna place our trade, and just like the previous trades, we don't change the risk. It's always gonna stay at a fixed number. That's your 1R. Today it's 400. And then now we're gonna look at, we're not gonna look at hourly levels because look how far away London is. This is our ultimate target for me. I would say if we inverse this 5-minute gap, we go break even. Because if she inverses it, there's really no reason for her to come back all the way down into this zone unless she's potentially gonna sweep beneath London again, or beneath Asia, my bad guys. So the order is set, let's play. The reaction is, I'm just gonna let it play out. Let me click play. Good reaction. Let's see if we get, I'll speed it up a little bit. So, starting to chop around. The good thing is, guys, is if we have the trend right, this should play out, even if it's choppy. We got another higher low, but we didn't break this high, so it's not a real higher low, actually. There you go. So now we have two higher lows. One here, one here. This one's about to form. This is the type of trade you sit around forever, and these are boring. Okay, we're about to get an inversion. Yep. So stops break even. Again, we got another free trade. Or hopefully full TP. It's already late in the day. You know what? This is where, who asked about, oh, Sid Vicious. You asked about trailing stops. I'm gonna show you a little bit of market structure, how I use it. So this is your bullish price pattern, right? This high doesn't count because it's internal. So you go for this guy. In theory, if you get multiple, in today's case, we're in a bullish trend, multiple higher highs, you got 1, 2, this one doesn't count, 3, 4. Bro, if price breaks through 2, for me, we're already changing structure. That's break a structure. So I would be confident in 1, 2, placing it at this third one. So now we're trailing our stops. Wait, did I actually 1, 2? Yeah, right here. So that's my trailing stop. I know it's not a big RR if we hit it, but I'd rather have that than a break even. So let's see what we get here. Real quick, notice guys, again, read the tape, we got the trend right. Once you have the trend, all you need is an entry model. You can use any entry model. You don't have to use this that I'm showing you. You can be a support and resistance guy. You can be an exponential moving average indicator guy. You can be using order blocks. I think Trader Rackbar, you mentioned using BISIs and SIBIs or even change state and delivery, right? I just like the fair value gaps. Real quick, I'm probably gonna cancel. Oh, I'm late, happy to be here. What's up, Coconut? Welcome. You're good, we're only on day 2 of the back test. This is taking a while, but I think we got, just go back from the sauna. Nice. Welcome. Sauna's good. That's good to clear the mind. So you're ready for some back testing. Okay. Real quick, guys, I just noticed we're near the end of the session. Top step closes at 16:10. So we're gonna have to cancel this, or it'll cancel us out. But we have to do it manually because unless we get some type of crazy displacement, but this price isn't telling us that. For me, you get this close to closing time, you're in the money, and you're not gonna hit TP. Oh, never mind. Let's just pretend we let it run. Okay, closing time. So top step closed out your order manually. And if you look to the right, oh, that's perfect. Okay, this is the 2R. This is exactly what our first target was anyway. So an $800 trade and your risk was 400. So that is our 2R. We're gonna close out or start trailing aggressively. Yeah, you could trail aggressively, but you could, I would just use the higher highs. So Coco, what have you missed? We've just done 2 trades, but thankfully both followed the system, followed the trend, use our entry model, both winning trades right now. So we're gonna move on to the next session. You guys will hear me be super repetitive, but I do it for 2 reasons. Sometimes I'll be here talking to myself because I feel like your subconscious ends up sticking to your subconscious mind when you're very repetitive. And if you guys are here to learn something that if you like how I trade, then you'll remember it better. So I'll be super repetitive. Great explanation on your buys. Thanks for sharing. Hey, my pleasure, man. Let's see. What do you guys think? Let's get a gauge. You guys think we'll end this month profitable? You think it'll be break even? Or does that not matter to you because execution is key and you're just focused on following the rules? I want to see what you guys think. Are you back testing a full month? Yeah, I'm gonna do a full month. Well, I'm gonna try to. It might be a little while, but we'll see. Let's see. So Coco, since you just got in, I'm gonna repeat this. We start off with our overnight levels. Okay, that's your London high price, that's your London low price. And I put London in blue just so it's easier to remember, and Asia's gonna be red That's the Asia low. We don't reference Asia high because London already took it. Okay, and I don't trade London, but notice that it swept Asia and it made its clear sweep and reversal. In here for sure there's some ICT style entry model, have it be order block, inversion for value, one of these that I'm sure thousands of traders took. This is like your typical draw on liquidity, you run it, you turn around. But we don't trade London, so. So Asia 18, London. Yeah, London, yep, exactly, you got it right. London goes past 9:30, but technically everyone references 9:30 as the New York session, so we just, New York starts here. Okay, so like I said before, guys, we have no bias right now. We're not long, we're not short. We have to wait till an overnight level gets taken first, and then after it's taken, we wait for price to tell us what it wants to do. So we're just gonna wait and see. London low taken, perfect. So are we gonna, okay, I was gonna say, are we gonna bounce or expand, but it looks like, is that a news candle? Yep, that's 10 a.m. news. That was aggressive. Look, it was so aggressive, it left the volume imbalances, imbalance. We rarely get those, but I really like volume imbalances. They seem to work just as well, maybe even better than the fair value gaps. So I'm just gonna have it there. Yeah, 9:30. I will say though, this is a pretty generic model. If you find the same criteria in London or Asia, you can trade it. But you have to find the same criteria, which is a very significant hourly grab. After the grab, we're looking for price to tell us if it wants to expand past it or create some type of reversal. After you have that confirmed, all you need is your fair value gap for the entry model. Like right here, let's look at this. She swept London, expanded past it. Had Asia not been here, I would say, okay, this sequence, we're gonna look for some type of bearish trade, but Asia's here. We can get a reversal because it's a significant level. You know, the sellers or the buyers are pretty strong here. So right now, price is not blowing through it, which tells me buyers are more in control than the sellers. Let me see, I've noticed your Twitter that you also trade, I'm assuming this one. Yeah, works on ES and NQ. Yep, Coco, you got it right, that's perfect. And then I'll show you how we do our TPs right now, our take profit levels. We use hourly levels, but I set those after we're in the trade right now, just so we don't take forever. Because we're only on day 3, we've been here for almost an hour. Jeez. Let's actually run through this real quick. This is a 5-minute gap, okay? We just swept 2 important levels. London low, Asia low. We just inversed the volume imbalance. So our first, it's not bullish yet, but our first somewhat bullish signal is the fact that price didn't blow through Asia. It didn't flush through it. We didn't respect some bearish PD array or disrespect a bullish one. That's our first one. It's not driving through the lows. Second one is inversion of a volume imbalance. If we inverse this 5-minute with displacement, I would say there's a chance we can go long. But if it doesn't happen with displacement, if it's a weak closure, I would wait, because overall this is somewhat bearish structure. But let's see. She's fighting the CE. If you notice, guys, this is the midpoint, right? It's acting as resistance. Rejection, rejection. We need to, this is what you don't want to see before an inversion. I would be less like for me, it's a less chance that if we get an inversion, I won't take it if we're messing around in the gap. Because if buyers are actually in control, you see this nice, beautiful displacive green candle, it should create a couple of those at least, maybe small pullback, and then a beautiful inversion. That will tell us we're going to London highs. But the fact that we're rejecting just the midpoint, like just the median, it's like, you see a third rejection. This is resistance, we're breaking through it. I would wait a little bit. That's an inversion. Okay. This is what I would say. Check it out, check it out, check it out. This is a little bit more tape reading stuff, but you'll pick this up as the more you repeat it. I'm gonna reference the resistance level right here, okay? I'm gonna leave it in white so it's clear. The fact that we had so much resistance in the CE tells me buyers aren't fully outpacing sellers here. Yeah, we broke structure. Best case scenario is that we come back, so resistance turns into support. If we reinverse it, I'm long for sure. But right now, it's this resistance that's keeping me from taking this inversion. It just doesn't, that's a better inversion. Okay, hopefully we see some bounce on the resistance. Not what we want to see for a bullish trade right there. This should be acting as support if we're actually bullish. Kinda is, kinda is. Actually, that's not bad. Would you guys take this one? Oh, let me see what Coconut says. So step one is making early highs gaps. Okay, so step one, we just have overnight highs and lows, Asia and London. Step two is we just wait for one level to get taken. For example, London was taken. Asia's close, so we have to wait to see if it's gonna get taken. But what we're waiting after the liquidity grab is either an expansion past the level, respecting gaps in that direction, or a reversal and respecting at least two gaps in that direction. Once we get that, we have our short-term bias, our short-term trend, then we can look at targets. Then we can look for an entry model. But we basically, like, to simplify it, we're letting price tell us where the trend is. As soon as we have the trend, we just need an entry model. But we use overnight levels for the trend because they're very significant, the overnight levels. We rebalanced this whole thing twice. I'm gonna wait because look at this. This looks like chop to me. If we miss this trade, guys, if we go London high, it's okay. We can look for an entry up here and expansion. I don't like how chopped this is. This is a tool I use all the time, just for visual, because you can easily just ask yourself, like if someone put that in front of you and said, is the direction super clear or is it somewhat clear? I would say somewhat. It looks a little more bullish, but we're not. This is ideal. This is clear. You see, this is a little sideways. So what does this say? Buyers and sellers are fighting. Buyers and sellers are fighting. This says buyers are in control. Sellers have no chance, right? So that way you know in the short term, prices are going to increase. So we're going to wait on this. This might be riskier, but I would say we inverse something like this 1 minute. Then at this point, maybe we go long. I didn't. Why why you didn't take the London low retest long? London low retest long. Because I don't trade based off retests. I let the trend establish first, and then we look for an entry model. I'll show you right now. Like for example, here, it looks bullish, but we're having so much sideways action during, like, if it's actually bullish, price is gonna be directional and beautiful. This is buyers and sellers fighting. Buyers are they're overriding them, but it's so slow. Think about it like this, guys. You, me, everybody that we trade with in props, we're the retail. So we're the liquidity. So odds are completely against us, and we have to take the highest probability, most sure trade. You can't put risk on something that's not A plus, because the odds are completely stacked against us anyway. So if you're gonna put $400 at risk, you wanna put it, or whatever your 1R is, you wanna put it at the most high probability price action and everything. This price action, it's bullish, but look how much sellers are fighting it, you know? See, we're back in this 5 range. We'd be in drawdown a little bit, which is not a bad thing. It's just we're not bullish fully yet. You see? Perfect. This is a perfect example. Perfect example. What did I say earlier? I said if we sweep Asia, we're not bearish yet unless we get a nice expansion to the downside. This is what you want to see. You see this displaces big red candles? This says sellers are in control. We inverse the 5, we completely disrespect that inversion. So not taking a bullish setup based off of all the chop inside the 5, at least for now, we could be wrong, at least for now, it was a good decision. We would have got stopped out. This is a big stop out. So I'm gonna delete our support resistance. Oh yeah, and it didn't respect our what should have been support. So there you go. Okay, I have a question for you guys. Real quick, this is an easy one. Remember how I said that market structure tells you very clear who's in control and whatnot? So in this sequence, it's choppy, but it's more bullish, right? If you saw this sequence, and I asked you, are bears in control or bulls? It's beyond clear, right? It's too clear. If this isn't sellers in control, then I really don't know what is. Exactly, bears. So this is the price you want to see, and then you take a trade, or at the very least you see a nice trend, even if it's higher lows. Like this has no lower highs right now, unfortunately, but for sure there has to be. Yeah, I'm gonna delete this, guys, because that 5 gap was useless now for us. We have a new 5-minute gap. And now I'm gonna be very confident in a short trade here. If it stops us out, it stops us out. What matters is that we're taking a high probability setup. That's your only job, to take the high probability setup and to follow your risk framework. Assuming you're executing an edge, you'll be profitable long term. Not today, not tomorrow, not in a week. It's overtime. What I don't want to see is too many inversions to the upside. Okay, this is an entry model for me. If we inverse this 1-minute gap, okay, we inverse this 1-minute gap and then we close beneath it, that's an entry model. Just as we mentioned on the other one. So we got one inversion. Two inversions. This is technically an entry model right here, but we're inside this one. So I'm gonna be a little patient. Yeah, I'm gonna say let's wait for this one. That's what I first said. We're gonna wait for that one. If we come in and inverse this 5-minute gap, guys, I'm hands off. We're not bullish, we're not bearish. This is just sideways at that point. Oh, okay, perfect. Entry model, taking our third trade. Stop will be outside the 5-minute gap just for protection. And I'll put it right at the base of the candle. Oh, and then Coco, I know you were asking about levels earlier. This is when we now do our take profit zones. And I don't know if you were here for this, but we do, personally, I take a lot at around 2 Rs. So that's an hourly low, should be a magnet for a price. If the price is bearish, this is a magnet for price. And then we have a lot of key levels here. A 1 hour gap fill, 1 hour gap entry, a 1 hour gap fill, 1 hour, 1 hour gap entry, right? This should be enough for a 2R. So let's see what we get. We're kind of on a roll right now. Okay, not exactly. Perfect. We have another gap entry, another gap fill. These are actually nice levels. $1.99, that's close enough to a 2R. I'm not gonna be greedy. So we're gonna place our trade. Same process, you never change your risk amount, right? 400. If we lose this trade, guys, don't let that be a distraction. We would lose 400. Look at the last trade's profit, nearly 8, or 8 exactly. So we would lose, what, quarter of that? Let's play. So we're in the trade. Good initial reaction. I'm gonna say we tag our first level, I'm going break even. Because it can reverse around the hourly levels are known for reversal points if the trend isn't strong enough, right? Is the screen big enough for you guys real quick? Can you guys see it? Or no? Perfect. Okay, so at the very least, guys, we get break even. This is a good trade. Again, notice how trend wasn't clear up here. It was clear, but it was just choppy. Buyers and sellers are arguing here. There's not one putting pressure on the other. No one's outpacing each other. Right here, sellers are outpacing. Completely ran through our levels, overnight levels. Now we got an entry model. We're hoping we have the trend right. And if you're a one-to-one trader, I should have done this from the beginning. But let's imagine for our one-to-one traders, you already won the trade. You took your one-to-one, you're good. Are you always using 5 gaps and then 1? It depends on what the market offers. So you'll see as we go, I use a lot of 5s, but entries are usually on the 1s, unless the only thing we have is a 5. Damn, don't like that buying candle. See, this is a good candle if you're looking for a bullish entry after these hourly sweeps. For us, it's no good right now because we're in shorts. But I can't deny the fact that that's a nice price action. But we already are depending on the trend. We're just depending on the trend. So the trend, like they say, the trend is your friend. We're hoping it saves us. Might take our first break even. Oh my. To be honest, I think this is a little bit of a greedy move. We could have, nah, I'll stick to our 2-to-1 rule. Yeah, it looks like, look at this beautiful bullish price action. That's what I'm saying. I would want to trade this if we were looking for long buys, but we're technically in a short trend, or in a bearish trend, I mean. Market's about to close. We should probably cancel this manually soon. Oh man, we might get lucky. Even though we haven't taken profit, you guys look at these levels, how these were our targets. You could have had your, like I mentioned, your 1-to-1, 1.3, 1.6. We got a 1.6. We're sticking to our system, so we can't cut it yet. Oh wow, that's Asia. Okay, we have to cut it now because it just ended. But we're still in profit. 3 trades so far. No problem, no problem. Let's go to the next day. And once you guys have a good edge, like sometimes I'll overtrade a little and go to like 5 trades. But once you have a really good edge, you really only need 1-2 trades a day. We'll do 3 if like the first one's like a break even, the second one's a loss, you know, and it's nothing too crazy. Let me see. Fast forward to New York. I think we've only taken 1 trade per session right now. Yeah. Can you repeat the setup so you go again? Yeah, I'm gonna keep repeating it every session we do, so that way it's clear. Do you think 1 trade a day is a good rule for someone who tended to revenge trade? One trade a day if you revenge trade. I have a question. What do you feel is the trigger for the revenge trade? This is the self-awareness part, because for everyone's a little bit different. Okay, Asia low, London low, London high price. We have our range, and if we look at structure, very bullish overnight session. I don't have a bias, like I said, going into New York, so this whole bullish structure doesn't mean New York's gonna be super bullish. It just means that it's probable. We have to wait to see what happens at overnight levels. If I end up break even, I get frustrated, and if I take 1 loss, I cannot stop. You know, bro, for like, I want to answer that. Everyone's a little different though, because it goes based off your psychology. One day, the way it happened for me is I got really sick of repeating the mistakes I knew that were the mistakes I wasn't supposed to do again. And at that point, I felt like they were my decisions. I was like, well, I'm not supposed to trade past my $600 PDLL. So if I do it and things go wrong, I just feel ridiculous, you know. And at one point, I wasn't being like negative, but my self-talk was like, Like, bro, that's really stupid. Are you not thinking? That was my thinking, and I was so frustrated. And one day I just told myself, I'm gonna spend at least 1 month doing everything I can to not break one rule. And if I can arrive to a month, I probably want this bad enough. If I can't, I have to admit that maybe I'm not psychologically strong enough for that. And I ended up copying trades for a whole month because I told myself, dude, okay, so real quick, let's take a quick break off this, because that's a good question, Roaring Momo. Take a break off the backtest. I'm gonna tell you something. This was like in 2024. I entered Lanto's group, and I saw that he was doing live sessions every day, or almost every day. And I'll get to you right now, Trader Rapper. And I had his profitable system, but I wasn't doing good. And I realized, oh, it's because I take a trade he's not taking. I change my sizing, like leverage up, when he's not doing that. He takes a win, he walks away. I was taking a win, and I would say, perfect. If that was that easy, let's take one more, because the edge is good supposedly. So I should be fine. And one day I was just like, you know what, bro? I'm gonna follow this guy, and every single trade he does, if he takes one trade, I'm taking one. If he takes 0, I'm 0. If he walks away after 2 losses, I'm gonna do. And if I can't accomplish at least that, I'm probably not cut out for this. And I didn't even arrive to the month before I realized that was the way to trade, is through a consistent process. So after about 2-3 weeks of following Lanto, my patience grew, because the guy, without even knowing, he forced me to wait for my trades. Sometimes he waited 2 hours, which for me, in the past, I couldn't wait 10 minutes. So my patience went up, which automatically increased my discipline. We're not born with discipline, it's something to be developed. He helped my discipline, my patience, and then the last thing that I realized was my biggest problem was my risk management. I was following everything, but one trade I'd risk 600, one trade I'd risk 200, all based off of my feelings, completely based off feelings, all emotional. It was like, oh, I got high conviction, so I'm gonna size up. Oh, I just took a loss, I'm walking on eggshells, I'm gonna size down. And inconsistent risk equals inconsistent results. Doesn't matter how good your edge is. Your results are completely a result of your actions, and if your actions are consistent, your results are consistent. I'm not gonna say you're consistently winning. I'm just saying they're consistent. And as soon as you have that data, you can tweak it. But with inconsistent data, you can't tweak it. There's nothing to tweak. It's a mess. I'm going on a rant here, but that's what wait, who texted me? For me, that's pretty much how I got over my over trading and stuff, is forcing myself to follow a process long enough to where I realized, oh, this is how you do it. And I didn't want to break that anymore, because I was finally seeing some consistency, and I thought I'll be crazy if I leave this process. So yeah. Who asked something? Oh, Trader Rakpar. What's your R versus the max trading DDL 600? It's a hard pill to swallow. Yeah, hard pill to swallow, but we have to face the mirror. It's like anything, right? Like, not trying to get too deep in it, but if we're just not honest with ourselves, people aren't honest. It's rare to find someone super honest to you, because everyone's trying to they don't want to look bad, so they're not trying to hurt you or whatever. You're literally like your only way out. You have to look in the mirror and say, I'm the damn problem. I'm the one that oversized. I'm the one that overtraded. It wasn't Lanto's trade. It wasn't this other guy's trade. It's always the man in the mirror. What are you asking? What's your R versus the max daily? I don't know if this is what you're asking, but usually I grab the maximum loss limit, and I like to use a maximum of like 15%. 10 to 15% depending on price action that month. But let's get started here. My bad, guys. What's your dollar risk? It depends. If I get it like a new 50K account, I start slow, like 200 or 250, because the con sizing doesn't fit perfectly. But if price action's been good, I'll just start at 3 right away. And then if it's like a 150K account, I'll probably start between 350, 4. Max loss is about 3. No, I try to lose like 2R, 2.5R max. Okay, I just want to make sure we get, my bad, this is gonna take forever. So we have not taken overnight high or low. We're just waiting. That's step 1. Remember, we're waiting for an overnight high or low. This is in range price. In range price, you don't trade unless you have a system for it, but this is not the one. This is a perfect example of what I mentioned earlier with the market structure. So I'm sure you guys already get the point here, but it's just good to repeat it. You show this to someone who's in control, buyers or sellers. It's like nobody knows, right? It's just a bunch of chop. So that's what you don't trade. Buyers need to tell you I'm in control, sellers need to tell you I'm in control. That's when we look for the entry model, but we only listen to the buyers or sellers message after an overnight range was taken, or an overnight level, sorry. You know what? We're so in range for so long now. It's 11:45, we're still in range. So at this point, we can seek other levels like that. That is a 15-minute price imbalance. And a 15-minute one is very strong. We use 5s because they're significant, but if a 5 is significant, then a 15 is a lot more. For a whole 15 minutes, buyers outpace sellers. So you can look at this. I don't want to call it a liquidity grab, but it functions, in practice, it functions the same way. Price comes in, rebalances, which means all the sellers that couldn't buy anything here finally got their orders in. Now there's gasoline in the tank for price to head to a direction, whether it's up or down, right? That's Lanto's Kant model. Kant? C-O-N-T? You know what? Continuation. Oh, yeah, continuation 15. Yeah. Step 1, wait for an overnight high or low. Yup. 2, expansion to the level with a 5-minute gap. Yeah, 3 level. So 2 is a little bit, you have to mix your own discretion. Like, we're not always gonna get the 5-minute gap we want or the 1, but whichever one pops up, we base it off of how price moves through it, right? But the entry model is only confirmed after how you said, wait for overnight higher low to get tapped, expansion through that level. We're not guaranteed a 5-minute gap, but what we are guaranteed is a reversal, hopefully if it's not choppy, or an expansion. Once you have a reversal confirmed, we're looking for an entry model. Once you have expansion confirmed, you're looking for an entry model. Can it be only 1-minute gap? It can be a 1 or a 5. I don't know if I would trade this session because it's already 11:50. I mean, you can't argue that the bulls are now in control and it looks like it's going for London high. Would you guys agree with me that the bulls are in control? I feel like they are. Okay, this is what I'll do. I know we don't always trade inside the range unless we've already gotten a liquidity grab, but I'm gonna use this last high that we broke through. Clearly that was some resistance, right? Price couldn't reach it. When it did, fat rejection. We grabbed some liquidity here. It's not really like liquidity, but in practice it acts like it. So imagine this like your gasoline for the car to keep driving, and we've clearly built bullish structure. If this acts as some type of support and we get an entry model, I'll go for London highs because we're so far from London lows. Okay, it's acting as a little support. See, we just wait for price to talk to us. Price just has to talk to you. It's like people call it like reading. I know track bar says reading the tape, right? It's funny, you're the first person I ever heard say that until I read Jesse Livermore's book, or the book about him, sorry. That's our entry model, an inversion. And technically we have a low time frame higher high. We broke structure here. We respected the break of structure, using it as support. What was resistance became support. That's reason number one. We have a short-term bullish trend, reason number two. We have a bearish gap that was inversed while making a higher high. So we have a three-way confluence. We will take it because we've been in range for way too long, and in theory, price should always be taking one during the session. I'm just gonna, this is more of a riskier take, but I'm gonna place my bets on London low getting taken first because we're so far from London high getting taken first because we're so far from London low. You know, so this is already over a 2R. We're gonna place our trade. Wait, let me make sure, sorry. Let me make sure our stop loss is, that was the last low. Yeah, this is similar to like an order block. You have your last low and then incredible expansion. So I'm gonna leave it there. Again, 400 risk, we don't change it, guys. Because then psychologically we're okay. We know, okay, we lose 1R. It's no problem. We really need to see a nice break of this high. If we don't, we're gonna learn our lesson for taking an in-range trade. But at the very least, we waited for, you know, three good reasons to go long. Yeah, see? Not my favorite PA. Perfect. We're break-even stops. If you're a one-to-one trader, you already hit your TP. So you'd have 2 trades in a row, winners, with this system, even with just a one-to-one. I hope this acts as resistance, as support. If not, I like retail concepts. I don't trade based off them, but I use them for information. See, it broke through support. But she's expanding away from it. Perfect. If we don't break through this high with conviction, I'm gonna trail the stop to this support level. Because this could be a range right here now. This could be a range. And I don't want to trade a range. Oh, how did I choose the stop? So the stop is usually the last swing low, or some type of, like, for example, this was the last swing low. So had our stop in there, technically we would have still been fine. It would have been a tick away, but I didn't choose this one because we didn't have an outside of the range trade. We're in the range. We were basing it off of 3 really good bullish signs. So I opened it up a little bit more and went to this little order block. The last low, we got incredible buyer expansion. So if price is willing to eat all this expansion up with bearish sequence, and we get back to this level, then I'm gonna be confident price is gonna come back down to, create a bearish trend. Basically we would lose the trade anyway. So I feel like that's a good point to say, hey, our model is completely invalid right now. No good closure above this. It was a weak, it was decent, but not gonna trail. That's pretty good, I guess. I'm going to wait, why can't I trail? Sorry, I don't know what, it's not letting me trail. All right, if we get back down to this level, I'm gonna just cancel the order manually. Perfect, that's what you want. Perfect. Guys, we're cooking. We are cooking right now. 4 in a row, for sure. That's first live stream luck. No, I'm kidding. We're following the system. Being a little picky with what we trade. I would move on from here. Great job, Dubs. Thanks, but I hope this is more to share what I look for. I hope it makes sense. If it doesn't make sense, let me know. I want it more to be a session of value. I appreciate the great job, but I want it to be more of like, oh, I see why you do that. I want to implement or try, or, because knowledge is to be shared. I know for a fact everything that I've learned from another trader, he learned from some other trader, and it just goes deeper and deeper and deeper. So nobody owns anything. Unless you've created a model entirely by yourself through backtesting. Like I have one that's mechanical, that it's my own, but unless you've done that, something like this is, came from ICT, and who knows who taught him, right? And so it's like, yeah. Learning so much. Yeah, actually feedback is very encouraged, because I want to do more of these. I'll just backtest random months and then maybe live stream them like this. And if you guys give me a little feedback, I'll know what to maybe focus on more next time. Same process. London highs, London lows. And then we got Asia lows, which are super close to London lows. What day is this? We're only on the 7th, guys. Damn. Wyckoff, I think, is going to be a weekly thing. It's going to be really high DH. Will this be a weekly thing? I don't know. Not every Saturday I'm backtesting, but once the thing is, this would be more to kind of engage with like you guys, build like a little community. We can all have a chat room, share strategies and stuff, because once you have an edge, there's not a big reason to backtest it. Your job is to now show up every day and execute what works. You backtest if you want to keep a little sharp, if for some reason you feel a little dull. And the other day I was backtesting because I was like, I haven't backtested in a while, so figured I would live stream, right? But maybe it'll be weekly. We'll see. Sorry, let me read this. I would love to understand better how you choose which gap to use versus how to invalidate the trade. Do you take a trade any time in the day? Like, no. So, for example, we have some rules. Like, let's say, like I said, we don't know what price is gonna do, but let's just say price opened, it was bullish, swept London highs, and then you had some type of fair value gap right here. I said this earlier, it doesn't matter if it's inversed. One of the rules is we don't trade the first gap that's inversed or respected, because we just need the context. We want to know, was it inversed or was it respected? And we just want to know that because that'll add to our confluences if we get more. The reason we didn't trade the first one is because a lot of them are fake outs. We're a little too close to the overnight range to be trading these first ones. Like, I would trade something more like this. Like, we got an inversion, so that's a cool sign. But before, on its way to the inversion, it made a bearish gap. And now I would say I would have more confidence in trading the rejection of this one and hoping we close beneath so we can eventually do a lower low. Because the first one, a lot of people get stopped out in the first one. That's just my experience. I don't know if that makes sense, but we'll keep going through it, and then you'll see. I'll repeat why we're not using a certain gap right now. Actually, I'll keep that in mind. Okay, so step one, we wait for overnight level. Looks like London high. Sorry, let me check one thing, guys. I didn't even... Oh, my bad for people on YouTube. I wasn't looking at the chat. Thanks for doing it. I appreciate it. Psychology Masterclass. Oh, what's up, Lavesh? You're with Lanto's group. I've seen you. How you doing, bro? I'm on the Discord too if you want to come through. That's I'm looking at that chat. But anyway, did we take a level? No level taken. So guys, one thing I like about the system is you can literally just kind of not chill, but you just wait for the level. There is no reason to trade this unless you have a system for it. Ours, we just wait for the overnight level. So we can just kind of sit around. I know for sure, for example, guys that are willing to trade in the range, I'm not gonna take this trade right now, but I'm gonna show you. This is a pretty established trend for the most part. We broke the New York low. We didn't break it here with confidence, but then we finally did. Immediately a beautiful new low. And then during that new low, there's a fair value gap that was tapped, respected, retouched, respected. So if you wanted confirmation, you could enter here and you could target the lows, because this looks, there's thinking probabilities. This looks more likely than for a reversal up to here, unless there is a reversal and we inverse this gap, then I would be hands off for sure. But I know there's guys that took that one. Yeah, see what I'm saying? They, for sure. Wow. I feel like we're getting FOMO. Okay, so swept the lows. Are we seeking, or sorry, we're not seeking anything. Are we going to see an expansion or a reversal sequence? That's the next step. Wow, clear expansion. Clear expansion. So now I would say, oh, well, there's no fair value gap here on the 5, only up here, but this is already in the range. I'm not gonna use that unless we're looking for a bullish setup. We're looking for, right now guys, I'm convinced on a bearish setup. You remember the trade from the previous day that we just took? We saw an incredible sequence like this, and after that, what followed? A nice downtrend, right? That's why I don't believe in premium discount, because someone would say, this is discount, you can't short this, and then you see follow through. So I don't use premium discount. What I see though is the respect of this gap right now. No entry model, unfortunately. Okay, we might get an entry model, which is if we get this inversion and a reclosure beneath, that's our entry model, because we already established a bearish trend from the New York Open. Actually, this was ugly and we don't trade this, but this is very clearly bearish. We're going to join the trend, place our bets. If it's a stopped out trade, we lose 1R. We're already up, what, 1, 2, 3, 4. I don't know what this is, but it's like 5R. Oh damn, that's confirmation. It's actually kind of fast. Who asked about stop losses earlier? So wait, someone said so. No, so this is our gap, right? Usually, if you're very aggressive, you can place your stop outside of the gap, but because we see so much volatility, guys, and we have a price imbalance up here which could act as a magnet for price, I'm gonna be conservative and put it outside of the second gap that we have here. And by the way, just a little quick touch on risk management. A lot of people believe your stop loss size, like they believe, oh, if it's this big, you're risking more. Not if you're sizing your contracts to fit the dollar amount that you set. So if we say, hey, 400 is the risk, this can be our stop loss. We're gonna get it to close to 400. This can be our stop loss. We're gonna get it close to 400, all based off of your contract size. So, for example, this here, this is an example of like right here. You see how it says 300 risk? That was one of my accounts. So let's say you put 400 risk right now. You're like, oh, $400 is my risk. You click enter, and then everything's updated. If you have a stop loss at 35 points, you'll have to put 6 contracts. It doesn't match perfectly, but your actual risk is about 427. So you get it as close as you can. It's not gonna be ever perfect, only like once in a while. But that's the idea of keeping stop loss, like stop loss size doesn't matter is my whole point. Okay, well, we're gonna get our entry model. We're gonna look for hourly levels for targets. So we have a gap fill right here. Gap entry, we already tagged it, but I'm gonna reference it in case. We have a volume imbalance right here, or sorry, volume fill, hourly wick low, internal hourly wick low. This should be enough for our 2R. Hopefully. So this is our 1-to-1 for our 1-to-1 traders. 1.6, 1.8. Okay, I'm gonna leave it at a 2R, even though technically this is a magnet for price. Okay, what's the rule of break even on trades? General D, welcome, bro. I'll tell you right now. I'll show you. Hopefully we get an example and I'll show you. I would say in a scenario like this, bro, see how we swept this hourly level already? I would say if we get a good closure beneath it, which confirms that this wasn't a very strong support, I'll go break even. That's not a fixed rule because there's a little discretion involved in the model, but that's what we're going through every day right now. Okay, same thing, 400 risk, don't change that. part of me wants to go for this level, 2.3. All right, we're about to enter the trade. Real quick, even if it's a loss, we have to consider we did our best we established a trend, we followed our rules, we're outside the range, we expanded past it, and simply after identifying the range or the trend, we're using our entry model. Inversion, reclosure to respect the direction. Okay, not a good reaction initially. Damn, I won't be surprised if we inverse this gap. For sure, it'll... Okay, the trend is our friend, of course. There you go. General D, so we broke beneath what could have been support. So break even stops, because if we break beneath that and confirm it wasn't support, and then we create a reversal, a reversal around it, we're probably gonna go up to this level anyway. So I'll just walk away with a free trade. Okay, one-to-one traders, you guys would have already been out. You're good. You know what? I'm gonna follow the 2-to-1 rule that I was talking about, just because I already know it's like not worth it to... You see, we got a level and a bounce. Perfect. I just want to see if the trend continued. Okay, perfect. Look had I stuck to my feeling of wanting more, not knowing that our 2-to-1s are technically more consistent over time, we would have been break even almost. Maybe the trade would have still worked out, but just seeing this sequence after seeing all this in the money over here, this would have messed me up psychologically. I'm not saying I would have made an irrational decision. I'm just saying I would be stressed out, and you don't want to be in that state. Take a break even, get stressed, and then enter your next trade stressed out, you know, because that's where we're human, and we more times than not make decisions based off how we feel. So it doesn't really work good in trading. Can you explain why your stop loss was there? Yeah, so check it out. I had mentioned that originally it's outside, just outside the candle that created the gap. Something like that. But we also have this 1 minute gap right here. These tend to be a little bit of a magnet for price, because price needs to rebalance these zones. So I remember saying I'm going to be a little conservative, and I put it outside the gap, but right at the base of the gap. I didn't put it at the wick because the base was conservative enough, in my opinion. And yeah, how do you find bias, brother? Here, we're gonna keep going through that. I'll show you right now. But good question. We need the bias or the trend established, then entry model. No entry model if the trend is not established. It doesn't make, for me, it doesn't make sense. Like, it's just higher risk. Let's see. Any questions regarding this trade? TP levels, perfect stop loss and target. Yeah, honestly the target, I don't want to call it luck, but I'm glad we stuck to the 2-to-1. Yeah, that would have been. And even if we didn't stick to 2-to-1 and we hit break even, that would have been a good lesson in like, hey, this is why you stick to what's proven, right? No matter what, we're winning during this back to, I don't mean winning trades, I mean like we're gaining value, so this is good. And then I get to practice with you guys. You know what? I'm enjoying practicing with you guys because I don't always ask myself questions while I'm backtesting. So if you guys ask, you get me to think a little more, or maybe look at something I wasn't looking at. It's like a win-win situation. Did that answer your question, Alex? The stop loss? Okay. Same thing as usual. Asia open, London open, New York open. And if you can already tell here, we're just in some massive range overnight. No real trend. Is this equal lows in Asia? Kinda. All right, so we have our lowest price of Asia, lowest price of London, highest price of London. Yeah, that was interesting to understand sometimes. Yeah, definitely some discretion involved. So I prefer to be the last swing low, but if we have fair value gaps that are generally a magnet to price, I prefer to stay safe and use them, because sometimes let's just say you entered a trade somewhere here because look at this bearish sequence. Well, your last swing low, I mean, there really, or swing high, there really isn't one, right? You don't want your stop loss to be way up here. I know we're on the 15 actually, so if we were on the 1, it would make more sense. Yeah, like let's say you entered this trade, Alex. We got the inversion and then the reclosure beneath, which is our entry model. The last like high is way back here. So now at this point, you already know, bro, that stop loss is incredibly massive. We can use these fair value gaps. So that's just a decision you kind of got to make in the moment. I wish it was very mechanical. It would make life easier, but no. Okay. So, what are we waiting for, my friends? Anybody know what we're waiting for? No one's gonna say anything. Waiting for overnight low to get grabbed. Already, we took out London. Yeah, exactly. London was swept. And 2 bullish signs, my friends. I know it's a small one, but we have a volume imbalance, and it looks like we're already creating a price imbalance. So clearly price is bullish here, but we're not bullish yet. If we respect these 2 imbalances and seek expansion after the respect, then we can seek longs. Or it'll disrespect them and it'll show some type of expansion to the downside, and we're gonna tag or aim for the London or for the overnight lows. These are just if when situations. If this happened, we do this. If that happens, we do that. We can't be stuck to one have one bias, right? This is the most perfect example of the price action we want. Nobody can argue that that's not bullish. That's as steep as price gets usually. You know, that's your somewhat parabolic price action. So zero interest in shorts whatsoever. In fact, this would be, in my opinion, the most A+ price can get. There's no setup yet, so there's no A+ setup, but there's A+ price if we don't chop around. Spoke a little early. No. Absolutely perfect. You know what, guys? I kind of messed up. I was too focused on price action, and this was a nice inversion. Prop tapped into 5 and reverse. Yeah. This would have been a good trade, but I don't want to FOMO into it. I would say if we get a good retrace into something like this, then we'll take it. But this was our perfect setup. Oh well. Oh well. Perfect. Yep. So that's our entry. Why? Let me go back. Step 1, overnight level tagged. Well, we're not bullish yet. We did create 2 bullish imbalances on the way there. Okay. Still not bullish yet. Then the imbalances were respected and we saw expansion away from it. So now we're bullish. We should have been looking for something like this imbalance right here. We got the retrace, got the inversion. Should have been entry. We were not focused enough, but we got expansion past it. So now we're taking the second setup that's presenting itself. Stop loss on this one. What do you think about this, brother? Or 1 second, journal D. Find our stuff. So we have a gap right here. So I don't want my stop loss to be around there. Swing low is way too... I know this is not a swing low, but this is the last cheapest price before we went into this nice move. So I'm going to consider our last low. And now, again, these hourly levels will be placed before markets open, but right now we're doing them as we go so we don't waste too much time. That is your hourly wick high, gap fill, internal hourly wick high. Let me see if there's anything on the 4. Sorry guys, my thing froze. I hope the drawings don't erase. Watch it erases all our data. All we're good. Okay, so we're following the same process. Stop loss. So, Alex, that's what I meant by we have to put a little bit of discretion. So I know this is not a red candle, so it doesn't look like a swing low. But that was the cheapest we've seen price since we got our setup. So if we break that level, I would say our model's invalid. So our 1-to-1 for our 1-to-1 traders is really close. It's right there. Two to one. I love it when the 2-to-1 TP level is in between levels, because if this is a price magnet and our TP is way before it, it's a higher probability. We're gonna set it 400 risk. Yup. We did have A plus price action, so hopefully it continues. Oh, I'm definitely break even there. I feel like I'm distracted. I didn't even say why would we break even. 1, 2, 3. So we don't have like a clear level for break even. When I don't have a clear level, I just use the fib tool, and I have a rule. If price is directional and clean, like this, I'll put break even at 50%, once we're 50% in the range. But if price is choppy and we know it can go back and forth, I don't put break even until we're about in between 61%, 78%, because we've seen price go this far, come all the way back down. It can hit us break even, but we're still in the trend, and then she goes and runs what would have been our TP. So in today's case, price is so clean, I'll just put the break even there, because it just price shouldn't come back if we're, yeah. If you're a 1-to-1 trader, you took TP. Perfect. Notice our moves are small, guys. I don't want to call this a problem, but the one thing with this system and how we trade, the reason the hit rate's high is because we're okay with 2-to-1s, 1.5 sometimes if price is bad. I love Lanto's model, it's great, but though Lanto goes for models like really nice targets like that, and that's great, but he's got the capability to do that. He's got the mindset, the psychology, he's got the skill to be able to always be okay with trailing out, getting trailed out, coming back to break even. Like that takes literally a special type of discipline, I would say. Me, maybe you can call it being conservative, or you can call it being less brave, I don't know, but I prefer to take them a little sooner. Unless my accounts are looking really good, I'll go ahead and hold with him. But most of the time, I'm like, let me just get out of this. A 2R is actually a great trade, even though people don't believe that all the time. I know guys are like, oh, you should get at least a 3R, because if you take a 3R, you can get 3 losses and you're fine. And I get that, but when it's live trading, for me, it's just different. Like, now you're really in the game, the pressure's on. I'm thinking about personal life, like, oh, is it worth it to risk this trade? Like, stuff like that. Let me see, what did you guys say? Yeah, no problem, Trader Akbar. I've seen them to hold trades in Malaysia and New York, yeah, exactly. Like, super nice. Like, that's a skill, bro. That's different. I feel like in trading, you have to find your way. There isn't one perfect way to do it. If there was, everybody would find out. Everybody would do it, and everybody would be profitable. But there isn't one way. There isn't one correct way. Show your first trade entry would have looked like. Yeah, for sure, bro. I'm gonna move this little guy. So this was the perfect setup. So this was the inversion candle right here, right? We got a bearish rally gap, inversed it, or sorry, wait, was that yeah, bearish rally gap, inversed it, got in out the next candle. This would have been a perfect swing low, or even this one if you want to be a little safer. Just go with the safer route, and you target your 2-to-1. There you go. And the perfect thing about our TP level is, again, it's in between 2 significant levels. So if you're going for something like this is higher probability, right? Yeah, you'll miss out on this move. Yeah, you're gonna miss out on some R. But if you're that guy that's trying to compound your account, you're maybe not too far away from payout or getting funding. I mean, there's nothing wrong with taking it slow, being conservative, Say if we tap. Oh, my bad, General D. I know you've asked a couple times. What did you say? Sometimes entry inversions are not clear. We do not get a sharp close. Instead, price keeps chopping around in the inversion level. Gives multiple closes near. In that situation, do you still take the trade based on the inversion, or is I'm gonna give you an example, bro. This is just the way I go about it. It's gonna require you though to miss some trades, and you're gonna miss some good trades, unfortunately. But I feel like with this approach that I'm about to show you, at the very least, you're taking the more probable trade. If this is the gap, let's say this is a bearish gap, okay? Bearish gap, and you're looking for an inversion to the upside. If price is down here, we come up here, we do something like that, and we're just chopping around and we're just chopping around and we're filling the gap and then we're chopping around, and buyers and sellers are both completely indecisive as far as who's in control. If we get this inversion, for me it's not a plus, and I'm not always taking it. I'll take it if I can afford the risk. If I can say, hey, I've had a nice 2-day, 3-day streak or a nice week, I'm totally okay with losing 1R. I'm not okay with losing 1R taking a bad setup, because then I feel really bad about my approach. If, bro, price comes in to inverse it, and even if you get a little bit of higher lows and it's a little slow, but at least it's directional, and then you finally get a displacive candle, for me, this is so much better of an inversion than this. Actually, I don't think you were here, bro. Earlier we took a trade, or sorry, we didn't take a trade, where we had this price action in a 5-minute gap, and price ended up reversing. So,
to the Chase mobile app, your kid can shop independently.
Price, like, oh, sorry about the ad, guys.
So you can go from.
Wow, we've been here for 2 hours, jeez. What I'm trying to say, bro, is price is like, how do I explain it? We just have to listen to price like someone who needs to be heard, and someone that is communicating something very important, and we can only really understand if we're patient and only listen, not put in our opinions. So here, price is telling us we're indecisive. Meanwhile, what I used to do is I would say, I don't care about this. If I get an inversion, I'm in. I was too fixed on the entry. I was too fixed on, I just want to be in the trade. If we get inversion, I'm in. Now I've learned that if you read price before the inversion, it gives you a theme, and it lets you know if it's a higher probability or lower probability. Does that make any sense, bro? And let me know if this was cool, Alex, also. Thanks. Yeah, no problem. Excuse me. Okay, so we're doing good. We're taking it slow. 1 trade a day right now. So we had all profitable so far. 1, we got trailed out. Okay, perfect. Oh, thanks for this. No problem, bro. Let's go on to the next session. Okay, look, this is the nice thing about this session. So the trend is clearly bullish. It's very nice. If you didn't take those 2 trades, I know there's guys taking setups here because this is clearly directional. But for us, we got a 2R. There's no reason to trade anymore today. So we're gonna go to the next session. Let me just check. Oh yeah. So Asia. You know what's funny is I feel like I'm trading better doing this with you guys, because now I'm being extra meticulous about what we look for. This is so cool. Let's fast forward to New York. Yeah, capital preservation is essential for sure, bro. Perfect. Okay, so now same process as every trade. We just need our levels. So that's Asia high. Asia low was taken. This is the highest price of London. This is the lowest price of London. Oh, keep in mind, so if we were trading this process with $400 risk on an evaluation or a funded account, right now you would have passed your account, or you would have, like with Top Step, you would have been able to withdraw after a few, only like 3 to 5 days of your profitable dues of 150 and more. Bro, I have 1,600 drawdown left on Apex. How much should I risk from now on? And what's RR's best for me now? Wow. Well, it just depends what you're trading, bro. Damn, I would tell you to backtest what I'm showing you now before you trade it. But do you plan on trading what I'm showing? Because it's hard to answer that if I don't know what you're trading. But there's nothing wrong with dividing your drawdown by like 8 to 10. That gives you 8 to 10 losses before you blow your account. But you won't blow it if you stick to that, because a decent model will not see like a 8 to 10 loss streak. In the middle, you'll have 1, 2, 3 wins here, you know. Let me see. Like this is a Q&A on top of the backtesting. How long did it take you to profit for you full time? Yeah, right now I just trade. I had another side gig recently, but I had to take a break on that. But right now, just trading. How long did it? Oh wow, 3.5, maybe closer to 4 years. I'm in my 5th year now, so it's been like a year and a half of like much better trading. But it took me a while because looking back, I should have just got some mentorship like this. I should have entered a Discord like Lantos earlier, but I didn't. I was being stubborn. I'm like, no, I can learn this on my own. I got YouTube, But once I entered a good Discord, I saw progress, a lot of progress. My age. Why don't you take a guess? Let's take a guess. What do you guys think? Trader Rack Bar, you know, bro. Don't expose me. Let's just say they call me Unk right now. Okay, Wednesday. This is the 9th. I guess 25. Here, real quick. I'm gonna keep that anonymous. We got our overnight levels. We've already swept one. Let's put in work. 28, 31. You guys think I'm old, huh? Wow. All right. I'm just kidding. It's not old. Here, guys, let's focus. We got our sweep. So I want to ask a question. We took London low. Are we bullish? Are we bearish? Or are we neither? Oh, would love to hear a bit about your journey. What model did you use before finding Lanto? Dude, honestly, what's crazy is this is why I was struggling so much. I wasn't using a model. I was simply just trying to trade and make money. I was fixed on the dollar amount. I was just like, oh, the idea is buy low, sell high, or sell high, buy low. All we have to do is stick to this. That's what I thought. So I didn't have a model. And then I started to do trend lines. I started using indicators. I was trying everything. But it wasn't the model's problems. It was that I had no consistent process problems. And when I entered Lanto's room, he started guiding me on like, hey, you just need to do the same thing every single day once you have an edge. And when I finally worked on that, when my process improved, my results improved. and I wasn't even focused on like, oh, we have to make this much. No, we focus on executing a good trade. The result is the P&L. So if you focus too much on the profit, you very likely forget how to execute the process, because you're coming from emotion, right? You make a decision based off of trying to make money as opposed to, oh, this system works over time. If you're focused on the money part, when you take a loss, which we're gonna inevitably take right now, this is just a nice streak, you're gonna be upset with the loss. And that's when psychology comes in. How do you act after that loss? Are you consistent with your actions, or do you now oversize? Do you now overtrade, over leverage? You know, do you take a model that's not proven, or a different model? You mix models on one account, you get mixed results. You know, it's kind of messy. But yeah, roaring Momo, no data. We have no data, you're right. The only data is the fact that we swept London low. We have no real fair value gaps here. That's what we're looking for. An expansion past the sweep. Dang. One minute fair value gap. Remember, we don't trade the first one. There's no reason to. Even though that looks like a perfect entry model, tap, close beneath, you short, it's the first one, so I don't trust those. We might have a bullish setup here soon, because we had our liquidity, overnight sweep, and an incredible amount of buyers stepped in. Again, market structure, I mean, that's bullish, very. But we're not bullish yet. We need to find an entry model. Ooh. That's so interesting. Everyone goes to the same psychology and everyone knows what to do your main time frame. Yeah, like, for me, I was stuck in this phase where it's like, oh, I know what not to do, but I keep repeating it. And I was stuck there forever. This PA, even though we got our expansion away, I mean, look how aggressive technically the buyers or sellers are not clearly in control, even though we have our expansion away from the overnight level, which is bearish, and I was originally bearish. Now we have this. I need more confirmation to be bearish, only because after this confirmation we started to mess around. So we need to break a nice low, or we're not bearish. If we're back up here, inverse this, I'll go for London high. Are you now? And now you are killing it. Thank you. I wouldn't say killing it, but I'm definitely more consistent. Alonto's killing it, man. That guy's on another level. There you go. So we got good closure and expansion past this low. Now we look for a short model. Is there anything? There's no gaps here, huh, guys? Not even on the 5. quick, kudos to all of you for being here for so long. I can tell you guys want to learn because it's been, wow, 11, 12, 1, 2, almost 3 hours. And this is honestly sometimes what it takes. Like, dude, I'm in my bedroom, right? I've been in this room sometimes for 8 hours at a time, 10 hours at a time, freaking making circles. Let me see. Be able to live from it is very impressive in my opinion. Thank you. Yeah. Damn, that's technically an entry model, but I don't like how far the entry is from the gap. For educational purposes, we are taking it anyway. Alex, this is our last swing high right there. We got one, and it's outside the gap. So for me, perfect stop loss. If it hits that stop, totally okay with that because it's valid. Now, the same process as before. We look for our hourly levels. So we have a gap entry there, gap entry there, gap entry there. And because there is such a massive difference between these two, this is where I would grab what ICT calls the consequent encroachment, which is just the midpoint. As a level, you can use it as a target or potential reversal point. And then our last wick low over here. Let's see if we get our 5 in a row trades. This would be insane. 1.6. Ooh. Kind of volatile day. So there's your 2R. Place order. Good. We tag our first level on break even. Oh no. There we go, guys. Stop loss, but this was literally A+. We're gonna go through the process. London sweep, beautiful expansion, but we got no short setup. We dealt with chop. You don't trade. This, guys, is where accounts go to die. Okay, this is incredibly tough to trade for me, unless you're like a Bollinger Band indicator trader. But this is aggressive. Finally, beautiful expansion. We broke the last low I mentioned. We got our entry model, perfect stop, and we only risked 1R. So this is the type of trade that when you follow the process, you take a loss, you can walk away feeling proud about the process. There's no problem with a loss. The problem is how you act after it. You know, if this trips you out and you end up over, like if we take one more trade right now and I say, you know, let's size up to make it back, that's a problem. Let's trade a different model that looks better because someone on X posted that they're going long at this level. That's a problem. You stick to one model, one process, with risk management being the priority. So we're gonna leave this here so we know we took one loss. Get rid of that. And we can see about a potential. I wouldn't go long yet, no. The peak of overcomplicating trading. His name for midpoint. ICT. Yeah, ICT. So no bullish direction yet. Well, maybe. Actually, I think I'm wrong. This is our 5-minute gap that got inversed. Inversed it with displacement, came back, treating it as support, and now she's breaking this high. Yeah, she could be long. She could be a long. this is what we're gonna do. 5-minute gap. This is basically our entry model on the 1 minute. We inversed it, we closed beneath it. I would go short, it's with the trend. The only problem is it's a weak closure. Notice these candles not displacive. So if we get a displacive like that, we're in. And here's the rule. If we take a second loss in the same session, 2 R's are max loss. We're not gonna go past that. So we will happily walk away. If we win this one, then it's just great, but it doesn't really matter. Here, 400 risk. Whoops. We will go break even once we tag this level. Perfect, come on. I feel so much better when we're break even. Nope. So this is a higher high. If it's a valid higher high, we will hit stop loss and we will be turning around. Yep, okay, we're moving on. 2 in a row. This is the time you don't allow your emotions to take control. And if you're on top step, you have a beautiful lockout feature. Like, you just lock yourself out and you're good. Let's just see our stats real quick. You guys want to do an analytics check? Let's just do an analytics check. Let's see how we're doing. Why is this not working? Sorry guys, my internet might be slow. Yo, something's going on. Have we been streaming for too long? Is that our sign? Oh, here we go. No analytics. Give it a second. There you go, there you go, there you go. All right, so we've been executing this, following the system. Yeah, remember I said our average R is not a 2, it's like a 1.6, this is 1.7, 75% hit rate. We're 9 days into the month, 8 days. I am being a little extra strict because I'm showing you guys the process. Sometimes, I mean, I'm human, I'm willing to take one more trade here and there. But for now, this session has been fire. This is the most important right here, okay? It's more important than the hit rate. Our average win is 0.69. Average loss, 0.38. Oh, don't know what happened. Point is that risk is being managed every single trade. We're back. And that's most important. Wait, average duration 10 hours. We don't have a 10-hour trade. I think this data is a little off, guys. Let's just continue. How you guys doing? You guys still good to finish the month? You guys a little tired? I have to leave for tonight. Thank you so much. Looking forward to that. Yeah, no problem. Keep it going, love it up. Coco, it'll be uploaded to YouTube too, so you can watch it later. So. All right, Alex Trooper, let's go. I know this stuff is tedious, so. Let's do it. R, perfect. We're good. If you're, yeah, I'm good, guys. We'll finish the month. If you guys are, I mean, look, we're only in the 9th of October. Let's start moving a little fast. But if it's too fast, you have a question, just stop me. But we're gonna move a little fast here, a little faster. Okay, perfect. Whoops. So that's our London high. That's our London low. That's our Asia high in red. Perfect. So levels are set. Real quick. Let's pretend this is it is a new day, but let's pretend that this is an actual new day, not a backtest session. We're showing up knowing that the day before we took 2 losses. But there's a big difference between showing up already in a little panic mode because the 2 losses weren't managed, over leveraged, whatever, and versus showing up knowing, hey, I lost what we could afford based off our units. Risk is managed. We've already made, I don't know if it was 6R or what, but we only lost 2. So we're good. The latter is very important because you can stick to the process the same way. If you show up in panic mode, you're tense or something, it's probably better just to wait till you feel good. You want to think as clear as possible. Perfect. I joined late because something important. Oh, it's all good, man. Yeah, I'll probably do more in the future, and this will be on YouTube. So. Okay. London high sweep, Asia high sweep, and bullish structure, but it's a little early. If we respect this 1 minute gap, we are golden because hopefully we get expansion and then we look for an entry model up here. Again, we wouldn't take this first one. Technically the first one is here, but doesn't count for me. It's literally right at open and prices to back and forth at open. Nice. So we got the move we wanted. I would say we need an entry model now. Wait, guys, give me like 2 minutes. I'm just gonna go to the restroom real quick. I'll be right back. Had London Asia grab. We had confirmation of expansion after the first setup, and I said we would look for a second one. Okay. So as of now, not as bullish as I was because we did eat up this whole sequence and we only did it in 3 red candles. 4. So sellers came in pretty strong. So let's just wait. Back in the range, back into the overnight range. All right. Another great example of what I wouldn't trade. This is gonna look overly simplified, but these boxes work so well. If you were to grab price and just put a reference like that, the rectangle, it looks like it's laying down. That's because price is choppy sideways. You see this sequence here? It looks like the rectangle is standing up. You know, you put it back into price, like look how beautiful that price looks. This is what you want to trade. This, buyers, sellers, they're just fighting. There's no clear direction. They haven't decided who's under pressure more. When buyers are under pressure, we have a downtrend. And then the opposite's true. Right now, no one's under pressure. It's pretty equal. And we can't trade equal balanced price action. We're trying to join the trend. Because we just need a little slice of it. What is this? Oh my goodness. This is probably, not trying to get political here, but this could be one of those days where Trump tweeted something. I remember this happened a lot last year. You know what? After that, I'm not gonna trade this session. We're gonna move on to the next one. Because in a real world scenario, you see all this? Chop, chop, nothing to do. And then you get a nasty, I'm not gonna look for a setup down here. Tariffs probably, yeah, exactly. Yeah, I remember when they would tweet about tariffs and price would go insane. So this is where you would have to be disciplined, guys, in my opinion. Like, I'm just showing you what my thought process would be, not telling you what to do. But for me, I would think, you know what, like General D mentioned, it's like, this is a cool day to say, hey, call it a break-even day, like take the day off, don't trade it, price is not clear and too volatile. We can save our capital for the next day. So it's kind of like if your job was like you were in the, haven't ever been in the army, but I'm assuming, like a situation where they tell you, oh, you only have X amount of ammunition, use it wisely. Because once you're done until you can get more ammunition. And in this case, we're talking about capital. So if it grew on trees, we could do whatever, but we have to be very selective because it doesn't. So let me just fast forward. Almost halfway through the month, guys. What are we on? Is this the 13th? Yep. Alright, so this is lucky 13 day. Are you guys superstitious at all? Oops, this is the Asian law. All right, guys, I know it's repetitive, but here we go again. Lowest price of Asia, lowest price of London, highest price of London. This is our range. We wait for, we wait for a level to be taken first. I'm just gonna click play, my bad. Okay, perfect. We got London low sweep. So again, no bullish bias, no bearish bias. We don't know if buyers or sellers are in control. We need further expansion to the downside or a sign that price doesn't want to break to this and a reversal. This is our fair value gap, but we don't trade it. Interesting. Okay. That's actually a really good buyer's candle after a sweep. And this is not fully confirmed yet, but we have a small higher high, which basically is just saying we swept to the level. If we were actually bearish, we actually probably might be bearish, but I'm just speaking with what we see. If we were actually bearish, who's calling? My bad, guys. If we were actually bearish, this red candle would have created a lower low. We would have had something down here, but that didn't happen. We're just gonna wait for more data. I would say if we inverse this 5 minutes, a little bit far for me. Oh, I didn't even see this, guys. Right here, this is better. If we inverse this 1 minute gap, I would go long. Why? Because we did have our London low sweep. We did have an expansion away from it, nothing too crazy, but when we came down, we created a higher high, and even though it was only one candle, this is clearly expansion away from this level. If it was bearish, it would have made a lower low, and it just might, but I'm gonna place my bet on this 1 minute inversion, okay? If we get it, let's see. The problem with backtesting is that in the live markets, you'll see this displacement coming through and you can mark it in here. So we would have to take this entry. So I have a question for you guys real quick. We can do one of two things. I'm gonna leave this up to you guys. Should we mark it in at the top, which will skew the RR, but we're following the rules perfectly? Or should we risk losing the trade, not losing the trade, missing out on the trade and leaving a limit order where our entry should have been? What do you guys want to do? We're either going to mark it in here or we're going to leave an order here and hope to get tagged in and get our entry that is technically a better entry. Limit buy? Limit 50%. Limit on the 50% of the recent candle. Perfect. That's actually right around where 50% is right around where I was saying we should mark it in. All right, so this is your guys' entry. Why is this thing? There you go. I'm gonna leave the order right there. Stop loss will be the last swing low, right there. And we're gonna go for London high. Yep. Roaring Momo and General D, you guys are responsible for this trade. No pressure, no pressure. I'm just joking. So this is the same risk as always. We don't change it. We're either gonna get lucky and get a nice entry, or we're gonna miss the trade. Either one is actually fine. Ooh, looks like no entry so far. Perfect. We're in the trade. Perfect. And we inverse this 5-minute. So this is A plus setup. And if you look at the price action, very steep, very directional. So, so this is actually giving me confidence for further upside. Let's see. Yeah, good job, General D. Let's let her play out. Add to the trade. Oh no. Add to the trade. Nah, you guys are crazy. That's funny. You know? Yeah, roaring normal, that's exactly what I was trying to decide. I was gonna say when we take this level, but we already did, so break even. I like that. Thanks for reminding me, dude. That's perfect. So again, free trade or 2R. And if you're again that 1R trader, you're already taking your base hits. Notice how this model 2 is good for 1-to-1. There's nothing wrong with taking a 1-to-1. When people get too, sorry, I don't want to talk about people. I'm talking about myself. When I'd be too greedy, I couldn't take a 1-to-1. And over time I realized, dude, I'm trying to go for all these big trades made me miss out on so many little ones that I would have already compounded by then, you know? Let's go with mid-range 1.8R. No, we're gonna do 2R or break even. Or we'll trail out if we get a really good new high. I try not to cut the trade early, General. Nothing against you, it's just perfect. Break even. Good move on roaring for the risk management. I'm still bullish is the problem here. Not a problem, but it's just there's no reasons to be bearish. We didn't expand past this low, and we didn't break this 5-minute gap. We didn't re-inverse it, so no bearish bias. We might just miss the trade, no problem. A break-even day is a winning day. But if we get a long setup, we'll go long. This is what I'm thinking. A lot of times there's like a fake out, okay? You get a beautiful big bullish move. It looks like it's going to London highs. We get sellers to come in. I'm not gonna act like a conspiracy theorist, but a lot of times this is manipulation. The trend might still be bullish, and this just washes out people. But we don't know if the trend's bullish until we get proven it's bullish still by not breaking this low. If it has trouble breaking this low, I'll take a long setup here. If it breaks this low and expands, we're gonna seek shorts down here. So again, if when situation, looks like we're gonna make a new low. So maybe not. Let me show you guys something. It's a little lower time frame, but look how many candles. 1, 2, 3, 4. Not this one. 5, 6, 7. 7 candles in a row are showing a low time frame support level. They're almost all equal. And this is above the last low I said that we should break if we are gonna be bearish. So because it's fighting it, and originally we were bullish, we're gonna stick to our bullish bias because this is good for the bulls. This is saying the buyers are not letting the sellers take control. Just look at all these wicks. So let's see if we get a nice setup here. I'm gonna go long. But we need a fair value gap. You know what? We do have a fair value gap. I just didn't see it till now. This is what I'm gonna do. We got the inversion. if we close above this level, which technically would be a break of structure, with the inversion, you get your double confluence. I will go long here. Stops at the last low. So let's see what happens here. That's the inversion. Perfect. So let's see if we don't get 2 break evens today, or if we can get 1 win. And now our R is better. This one was 2.3, but we got break even. This one's a 3.5. But I'm not gonna wait for a 3.5. Let's place the trade. 400 risk. Safe. Wait, did we get tagged in? Oh, we did, thank goodness. Good initial reaction. We're gonna go break even at this level. If we get it. You know what? Sorry. We have a fair value gap here, a 1. Just to be safe, when we fill this, I will go break even, because we can easily fill it and reverse, and this could be a higher time frame bearish trend. So I'm gonna be more conservative. Yeah, so break even now. Perfect. And I said we would go for a 2R. So this is a much higher probability setup. Oh wow, actually, this is so high probability, bro. I'm gonna, if we're actually bullish, we'll break through this level. We're just gonna go to a level now and forget about R. If it's just a lucky day that price is trending, we get a 2.7. Because in theory, she should go to London highs, because we got a London low sweep and we still have bullish expansion. I hope it's not 2 break evens, bro. Oh wait, I'm sorry guys. I didn't put the order. There you go. Can you explain the trade again? Yeah, I'll explain it right now. Let's see if we close out, break even or not. Yup, we hit, okay. I'm gonna explain it for you. I'll see you later, General D. Take care, brother. Do I pay attention to ES on it? I do a little bit. Yeah, basically, I'm looking at both. And if we're bullish, let's say we've decided the trend is bullish, I would trade the instrument that is that has the A+ inversion setup for the entry, because sometimes one's offering an entry and one's not. And if I'm bullish on both, I'll just trade the one that has the entry. You know, because then why would I take the other one, right? There's no setup. So for R, this is the trade. Our first initial sweep was London low, but we weren't bullish or bearish, right? We were waiting for expansion after a fair value gap respect to be bearish, or a reversal and some type of bullish respect to be, or bearish disrespect to be bullish. What we got was a sweep, an expansion, rejection, but it wasn't a lower low. That's why I put this little reference here. It wasn't a lower low, which tells me buyers are in control. And then the very next candle, very bullish. So we traded this inversion, this 1 minute inversion, not the first one. The first one is too risky. We took the second one. Entry was supposed to be around here, which we got, thankfully. And we were targeting London high. But we got break even. So we came up here, broke the last swing high, break even. That's trade 1. Trade 2, I said we will be bearish looking for shorts when we're under overnight London low level. But we didn't get that. Look how close we got. And when we got close, I referenced this to everybody. This type of wick heavy price action tells me at least in this one, the buyers don't want to let the price go any lower. You got 1, 2, 3, 4, 5, 6, 7 candles that are all wicking the same zone. If it was bearish, at one point it would just blow through that and create a new low. But because it didn't, we don't change our buys. We're still bullish. This was the inversion I was trading, but there was no market structure shift. This was the last swing high. The reason that this high doesn't count is because this high is internal to this one. Okay, so what happens is I said if we do a market structure shift, we close above this reference after the inversion, we're gonna buy. And then simply we target London high again, but my targets are more conservative. But let's see if we hit London high, okay? Let me know if that makes sense. Yep, she's got, well, I don't wanna say she's gotta go for it, but I think it's high probability. You're watching ES as well. You got your charts up? Oh, that's great. Heck yeah, bro. This is a beautiful buyer's candle during a bullish trend because it just gives us confidence that, yeah. So London, if you were that guy that could hold until London high and you weren't trying to compound, you got yourself a 3.5 R. If you're a 1 R trader, you're in and out quick in 5 minutes. If you follow the way I trade, we got our 2.7. So look at, we took how many losses in a row? 3, right guys? 2 or 3. And we're now back to where we originally were profit-wise. So this is the perfect example, in my opinion. Sorry, I'm not trying to say the perfect example. It's a good example of risk management. Profitable trade, trailed out, got our 2R, 2R, 2R. We lost 1R, lost 1R. Break even, that was a good one from Roaring Momo. And then we just got our first 2.7R. And why did we get 2.7? We let price work for us because we noticed that our 2R target, based off the chart, not based off numbers, based off the chart, was conservative. Price was so close to our 2R already with the strong trend. We thought if it's gonna grab this high and we're going for London high, we can aim for a target like this to be conservative. And the 2R was just given to us. We didn't really go after it. It was just given to us. So, great session. We move on. Same process. Let's go. Let me just check the other chat if anyone's, oh, we're good. Kind of want to see how much sense I'm making to you guys, and if maybe one of you guys want to chime in on step 1, step 2, step 3. Anybody interested? There's no such thing as like doing something wrong. We just learn, so don't feel shy. No takers, no takers. Okay. Question, does no one seriously want to do step 1, step 2, step 3? Maybe. All right. I'll just take over then. Asia high, London high, London low. Let's see what we get here. Go to the 1. Real quick, after step 1, oh, I got some R, perfect. Step 1, Wait for any session low or high to be taken. That's right, perfect. That's exactly what we're doing. After that, if you want to chime in on the next one, let me know. We got it, R. So what do we do here? Or what are we thinking here? Do we have a bias? Or anybody else? Ramon, both of you paper-handed typing. Okay, cool. We got a couple people about to chime in. Step 2, wait and see what price does next. Okay. That's perfect. You're right. Bearish, but need more displays. Whether it is swept or expanded. Yeah, both of you are right. So let's see what happens. Might be a reversal type of day, maybe not. Okay. There you go. So we got the expansion after the sweep. So basically, best case scenario now is that we find some type of entry model for shorts, unless we don't get it and, you know, there's some type of aggressive buyers. So I will say this now, if this gap is inverse and then kind of re-respects the downside and we get expansion with a new low, for me that's confirmation of a bearish trend, and then we won't trade this one. We're gonna find a trade down here. But if it's inversed, go back into the range with strength and it's looking bullish, then we got our liquidity grab and we can go for London high. So if this happens, we go bearish. If this happens, we go bullish. No bias, right? We did inverse it. That might be a short entry model. No. Okay, I think this could be your typical London grab or overnight low grab and reversal. If anybody wants to answer, why would we enter a trade around the zone? What needs to happen around the zone for us to enter a trade around this 5-minute gap? I'll give it a few minutes. Inversion, right? Now, the reason I would trade this inversion though, instead of saying, oh, this is the inversion, expansion, confirmation, and look for an entry up here, is because we got our first inversion, which technically doesn't matter. But what we did do, you see this last high? I'm gonna make it white. We got a break of structure to the upside. That's bullish sign 1. We made a little higher high, bullish sign 2, or bullish sign 1 is the higher high, bullish sign 2 is the break of structure. We broke the last high. If we get this third one, that's a 3-way confluence. We can happily place our risk, and if we lose it, we have no problem because it was an A+. There you go. We followed the rules, so it's okay. Last wick low. So you see how there's like a little wick low right here, and then there's the green one. I'm gonna go with the green one just because that tiny little bit for me, you never know, right? Just give it breathing room. And now we're going for London high. Now here's the thing. This would be now where we set our hourly levels again. We did this at the beginning of the session because our risk to reward aiming for London is only a 1.5. And our model thrives on around 2 R's. So we're gonna go with this hourly high, internal, this is a hourly gap entry, hourly gap fill, and then Asia high is way up here, so we should be okay for a 2R somewhere there. So this is a 1.5, 1.7, and then this is best case scenario for me, that our 2R puts us in between two significant levels. Because if this is the magnet, if this is a liquidity grab, then this is a much higher probability. You know, how many times have you had a liquidity, or sorry, hourly level, and price just gets 2 ticks away, and then your reversal comes. So this TP is protecting us from